Yeah, once again, Orvin says, can you talk about the managing fake outs in Swiss franc JPY, Euro Swiss franc, and AUD USD? 3 hours ago, 1 hour candlestick closed and broke support resistance, then next hour candle reversed. So how to deal with it? So let me check the Swiss franc JPY as example, and let me break it down to 1 hour chart this time. So here's 1 hour chart, and I think you are talking about the fake out, this one. Let me put the vertical line. This one was a fake out. So candlestick once moved upwards and broke the resistance level, and afterwards, soon after, it retraces backwards. So let me break it down to the 5-minute chart to see the details about the market. So let me split the chart. And on the left, I will post the Swiss franc 1 hour chart. And on the right, I will post the 5-minute chart. And this time, you will only look at the candles in 5. So let's see, previous hour, actually, this hour happened exactly from here. The 13 UTC, 1 p.m. UTC time zone was the beginning of the 1 hour candle. Exactly over here. So let me put the vertical line here also. This was the beginning of the 1 hour candlestick, and at the end of the candlestick was 13.55 or 14 exactly here. So this was 1 hour chart breakdown in 5 minutes. So how to avoid the fake outs? Most likely the fake out happened exactly on this spike here. So you can break it down to the lower time frames like this and analyze how the market broke upwards and retraced backwards. So if you look at the 5, once the market broke the resistance level over here, and soon it retraced backwards. So, but most likely you thought that this was a fake out because you saw this long bullish candlestick in 5, and you expect the next candlestick to be bullish continuously, but it didn't happen, and that's why you thought it's a fake out. So to deal with the fake out, you better wait for the candle close, is my advice. But you can't wait for the candle close in 1 hour, it's impossible. Or you can't wait for a day to close it because you can't trade. If that's a true breakout, you can't trade. So how you can actually wait for the candle close is, of course, in this case, it happens in 1 hour chart. So you want to wait for 1 hour chart candlestick. But at the same time, I recommend you to break it down to the 5-minute chart. This is usually what I do is in 5, let me see if I can do a battle play and see here. So this is in 5. We already saw what happened in 1 hour chart, but let's focus on 5. So 1 hour chart candlestick is forming still, and it just goes up and reverses backwards. And if I can just move the candles one by one like this way, the market retraces backwards. So it looks like it's ranging, and soon you see this bullish candlestick, it broke upwards. So as soon as you see this breakout, you might go, oh, so this is a breakout, this is N wave, the market should go up this way, and you buy here. You buy here, and then, as we saw earlier, the market retraces backwards. So when the breakout like this happens in 1 hour chart or the 5-minute chart, I would recommend you to wait for the next candlestick close in 5-minute chart. So let's wait for the next candle close, and that will be bearish, and it actually goes back into the range. So as a result, you know that this was a fake out, but however, this is still in the middle of the N wave. Looks like this is still looks like in the middle of the bullish N wave. in this direction. So the market might have gone upwards this way. It might be afterwards supported here and it goes up in this direction. If that's the case, this won't be a fake out. So the next candlestick or next candlestick might be bullish, and the market should go up in this direction like this as a result. And so my suggestion is to wait for the candlestick close. So it looks like the breakout is happening right now also. So let's watch the real market and study about this fake out or not. Just talking about this previous fake out, I moved the candles in 5 like this. So next candlestick became into the range. Next candlestick also in the range. So as a result, unless you see the market closes above the previous resistance level in 1 hour chart, as a result, you see this was a fake setup. So I would wait for, in this condition, I would wait for the 1 hour candlestick close. So I would wait for 10 more minutes until it closes and see if it closes above the resistance or below the resistance. So let's just wait for 10 more minutes here. So wait for 10 more minutes and it didn't close above. And as a result, it was a fake out. You can see here. So looks like the market is breaking upwards now. So let's look at the real chart and talk about the breakout. Okay, so here's what's happening in 5. So in a 1 hour chart, seems like it's breaking upwards. You see the Kumo's up. You can see that the Kumo's up and Kijun-sen up. Tenkan-sen also up and Chikou span above the candles because of the breakout. But we have to hold it here. We have to step back and do some additional analysis in 5, whether it becomes a fake out or not. So looks like right now in 5-minute chart, looks like this is consecutive N waves. So the market is going up in this direction nicely. So looks like it goes up in this way. But once again, we have to wait for the candle close in 5 in this case. So let's just wait for this most recent candle to close in about 16 seconds. If it closes below the resistance, then the market might reverse backward the range. But if the candlestick closes above the resistance, most likely it continuously goes up. So now the candlestick closed, and what's happening right now is that the close price was exactly the same as the previous resistance here. Previous resistance. So since it didn't close above the previous resistance, I would wait for one more candlestick to close. If it closes above the resistance level, which is 120.33, then on the next candlestick, I will place a buy. But if it doesn't close above the previous resistance level, and then it might be double top as the market retraces backwards this way. So this is how you can read the price action. So the market most likely goes up in this way because in 1 hour chart, it is bullish. So the market tends to follow a major direction and most likely goes up continuously. But when you look at the lower time frames, you can see the clue of whether the market can break upwards or not. I mean, if this breakout becomes fake or not, you can look at it in 5 or lower time frames and really see what's happening. And I haven't talked about the risk management yet. So after you confirm this close candle, then you look for an entry edge, you look for the reason to buy here, and you place a stop loss. And in case the market reverses backwards, you close the position with some small loss. Right? So here you can see the market is going up, but if the hold here, it still has 2 minutes and 55 seconds to close. And we never know if this becomes a fake out or not until we see the candle close in 5 in this case. And as for 1 hour chart, it has like 32 minutes and 38 seconds to close. So 1 hour chart looks to be bullish, but the only thing we have to wait for is a 5-minute chart candlestick. Before when I was looking at this kind of breakout, I jumped into the market and the market retraced backwards and I get the stop loss many times. But now I can just wait, relax for the next 2 minutes and see if the candle closes above or below. So psychologically, it's a big difference. You know, only 2 minutes or 3 minutes you can wait or not is a big difference, actually. So it takes another 1 minute and 40 seconds to close. So let's see. Sometimes I look at the 1 minute chart too and see how the candle's forming in 5. So within the 5, here's 1 minute chart. And within the 5-minute chart, looks like this is bouncing and it goes up. But this time we just focus on the 5-minute chart. In the meantime, let me look at the higher time frame and see if it's uptrending or not. So let's check the 4-hour chart. All right, in the 4-hour chart, the Kumo up, Kijun-sen, Tenkan-sen up, and Chikou span above the candles based on this breakout. Oh, but it looks like there are a couple of resistances in the past here. A couple of resistances here at 120.40 area. So 120.40 in 5-minute chart will be around here. So yeah, the market could go up in the short term, but it may reverse backwards. And since this is Swiss franc pair, this is a bit tricky market. You know, the lower time frames can be a bit spiky, and before you place a position, you better check the broker's spread, because sometimes it gets very wide. Without knowing, if you place a buy, then your buy will be executed all the way at the top here. And the market sometimes won't reach to that, price level. Okay, so now in 5-minute chart, candlestick closed above the candles, right? Above the candles, above the previous resistance. So this is good to go. This is the breakout. So from here, I will look for the buy chance. So what I usually do is I take out the Bollinger Band and stochastics and some other confirmations. And it looks like in 5-minute chart, yeah, it's been band walking, but the gold cross happened way back. And yeah, looks like there is a resistance breakout, but that's about it. And since the previous resistance level in the 4-hour chart is kind of close, 120.40, I would hold in this case. I don't think I will buy. I would hold. I would prefer to hold. This is just based on my experience, but yeah, I would prefer to hold. Yeah, better to wait for the breakout of at least at this level here. 120.58 area was a previous high from the August. So yeah, most likely I would wait for that. But let's see. But once again, it depends on your risk management. So if you buy here right now, then most likely I would place a stop loss below the previous low in 5, which is my strategy. So if I place buy right now, most likely by the spread, the buy position will be executed somewhere here, practically speaking. So my stop loss would be most likely at the previous low. I will take this low or all the way low here. Most likely I will take this one, 26 pips of a stop loss. I take the stop loss 26 pips and will place a buy and keep holding it. But if the market reverses backwards, then at some point I will exit. So in this particular trade, I will watch closely if I buy right now, because there is a potential reversal condition happening in the market. But you know how I wait for the candle close in different time frames and see if that will be a fake out or not. I think this is very important to remember. So when I say you'd have to wait for the candle close, sometimes it means in 5, and sometimes it means in 1 hour chart, or sometimes it means even in a daily chart, depending on which time frames the market is trending and which time frame you're about to trade. The time frame to wait for the candlestick should be different.
Thank you for watching the video until the end. As you may have already known, I run an Ichimoku community, and here is a list of the perks that you can expect. I have these perks as of April 2020, like Ichimoku Basic Masterbook, members only lives 3 times a week, and Ichimoku Discord, members only Q&A session, Ichimoku quizzes, and original emojis and badges that you can use on this YouTube channel. But I am thinking to add more and more perks to this membership community because this is a paid service and I don't want you to waste your time and money on this. As a Japanese trader, it's been such a pleasure to be able to share the beauty of Ichimoku Kinko Hyo, and I will continue to try my best to share the knowledge and wisdom with you based on my own experience. So if this is something that you're interested in, you can always join this Ichimoku community by clicking a join button on the YouTube or by accessing to a link on the description below. I will be waiting for you on the membership lives and Discord and hope you to continue to build up more Ichimoku knowledge. I wish you a great success on your trading journey, and I will see you on the next lives or videos. Thank you for your support as always, and stay gold.